Hi everyone, welcome. This is Eric Rodebois, EPGD Business Law, and I just posted a video which we filmed a few days ago about what to do when your accountant screws up. And the funny thing is, it's totally a true story. And it's the story of where you run a business, you hire professionals, you hire a payroll company, a bookkeeper, an accountant. They screw it all up and you get an angry letter with penalties and interest from the IRS. And the fact is, we tried to get those penalties abated and the IRS said, no, sorry, it's your fault for hiring idiots. And my solution was pay the IRS, fire the idiots, hire better people, and then consider suing the idiots, and then they can make a claim on their malpractice for all the inconvenience and the time and the penalties and the interest that you had to pay. So the funny thing is, that's not the story I wanted to tell. The story I wanted to tell was about a different client of mine. And so this client of mine, another business owner running a business, and they hire an accountant, and the accountant's job all year round is to do the bookkeeping on a monthly basis. And basically, what's bookkeeping? So bookkeeping nowadays is you just enter these your credit card statements and your bank statements. You can do it automatically into QuickBooks, and then QuickBooks will then, you'll run a credit card and it'll be like $37 at Publix, and then what your bookkeeper does is it goes through all those lists of uncategorized expenses and they categorize them. That's what the bookkeeper does. So they'll say, oh, $37 at Publix, office supplies. $200 at Hillstone, meals and entertainment with client. $1,000 for the rent, rent. Print shop, marketing, etc. And they just go down the entire list, and every single charge, every single month just gets put into different little categories, so that then on a quarterly basis, you have a meeting with your accountant and they provide financial statements. So what are your financial statements? You got your balance sheet, your cash flow statement, your profit and loss. And what these statements do is they're supposed to provide the business owner with actual information, like, am I profitable? Or how about this? What is my budget? What's my break even? In my mind, I know how much money I need to make each and every month so that I can break even on that monthly expenses. But remember, we live, a lot of things I don't pay every month. Some things like insurance, I pay once a year. So on those, I might have a huge hit in the month of February, but then I don't pay anything else for insurance for the whole rest of the year. So in my mind, what I do for my budget is I'll then divide that by 12. And so I know that I need to make X amount of money every month in order to break even for the month and then moreover for the year. Okay, so now my accountant has taken the bookkeeper, and usually the bookkeepers, I'm not going to disparage bookkeepers, but traditionally it's a very low-level job in the accounting world. And so then periodically an accountant reviews the bookkeeper's work, and then periodically the CPA reviews the accountant's work, right? The CPA is like the top level. And there might even be different levels of CPAs. And so this client of mine, they would pay their accountant and their bookkeeper, and it's one package deal, right? And so then on a quarterly basis, they'd have a meeting and they'd say, okay, how's it going? What are we looking at? And then my client would always say the exact same thing to the accountant. I want to know as early as possible how much I'm going to owe in taxes next year so that I can start saving for it, so that I can make sure that on April 15th, I actually have enough money to pay. And obviously, I'd like it as soon as possible. Now, here's my theory on this. First of all, if the QuickBooks are being maintained all the time, then the QuickBooks will be ready and you can just go boop, 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 and it'll give you an estimated projection of your profit and loss for the year, and then you can go boop, 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 and you could be like, all right, and here's what I think your taxes are gonna be. And I think it should be that easy. And then by the beginning of January, we're wrapping up the books for December. I know everything's been entered into QuickBooks, so it should be like boop, 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 here's your profit for 2018. All right, and so they can say, I estimate you're gonna owe this much in taxes, but there's still a couple things. We can be creative. Maybe we can put some more money into a retirement account or a savings account. Maybe there's things, and this is where a good accountant will then say, hey, here's some things you can do to help you save some money on taxes. Okay, even things you can do the following spring. So like spring of 2019, there's maybe some things I can do to reduce my taxes for 2018. Okay, this is where I'm not talking to the bookkeeper. I'm not talking to the accountant anymore. I want to be talking to the CPA. All right, so then in March, they say, okay, we've got a first draft of your taxes. We actually think you owe this much. Okay, great. And then in April, they say, okay, we finished your taxes. We were pretty close. Here's what you owe. And by this point, you've got no surprise. You're not shocked. Moreover, I think that you should be able to have this meeting in July, and in July they're like, all right, well, half of your year is done, so we estimate that your profit is going to be this much because you've already done half the year. And I got to tell you, even in my business, my income and expenses are pretty steady. Like, I know the cash flow. I can predict within 15% what I'm gonna make next month. So anyways, guess what happened? My client was done, paid their taxes, was happy, everything was perfect. And at 6:30 on April 15th, the accountant called him and said, hey, we made a really big mistake. You owe an extra $65,000 to the IRS, which my client did not have sitting in their bank account. And my client called me in a fury. They want to sue people. And my short answer is there's probably no liability there. You might be able to go after them for whatever penalties the IRS are going to put on you, because guess what? You're now late, because anything you pay after April 15th, you have a late payment penalty. So for all of you out there who have questions about this, make sure that you trust your accountant, and make sure that if you have a problem, you come talk to a lawyer like me. Thank you.